Guys, welcome in this morning. We have an awesome conversation, four-way conversation. We don't have guests all the time, but today we decided to put together the Avengers of private equity and housing affordability together. So we got James Lee, we got Tiffany C, and we got Freddy Smith. This is going to be an awesome convo. We're going to touch on housing affordability, lack thereof, private equity, and the wealth gap. A lot of topics. I have a feeling this could be a series that we come together on every quarter and touch more on. But we're going to do our best to not only bring up what's happening, what we're seeing from our vantage points, but also maybe some potential solutions to these problems, ways that we can get through them. So, James, for those that don't understand or know, Joe Rogan's #1 social media news source, please introduce yourself.
Yes, thank you so much, Zach, for having me on the show. My name is James Lee. For those of you who don't know me, I'm usually wearing a fishing hat, but I'm leveling up today with my branded 5149 hat. That's my YouTube channel. And what I do, more or less, what I tell people is that, I'm trying to help people unlearn propaganda, because I think that's one of the big things that, the media has dropped the ball on. I'm just trying to educate people. As I educate myself, I'm trying to educate others. And hopefully through this process, put together a more informed, knowledgeable world so we can eat away at some of this corruption that is all over the place.
Tiffany, rock into it. Appreciate you, James.
Hi there, my name is Tiffany Cianci. I am a content creator that focuses on really empowering the working and middle class to understand what they're up against, not only in the political sphere, but in the financial sphere. I fight very hard against private equity and their absolute strip mining of the working and middle and small business class of America. And I do it regularly through the help of people like those on this panel. So I'm just really excited to be here.
And you, Tiff.
Oh yeah, and I'm Freddie, and I'm a content creator as well. I was a real estate agent for a few years, and it was during the low interest rates into the high interest rates. And as I was making content, I dare I say one of the first. That sounds a little egotistical, but maybe one of the first that properly made a video talking about how we're going to have a housing affordability crisis just by basically running the numbers on the page. It went mega viral, got picked up by basically every single news network and every publication around the country. And it started just getting me a lot of attention. And I started looking at the questions and doing my own research. I kind of didn't set out to be in this field, but it just happened. And I became obsessed with finding out why housing became unaffordable. Why was it more affordable in the 80s? What were the economic policies that led to this? Why is the middle class struggling? And it just became a passion project to help people understand and teach myself as well. Because like many Americans, we aren't taught this in high school about economics. I think it's very important that we know about economics and to hold our government accountable, considering we pay so much in effing taxes. And I think we should have a say and get the things that we want. And with the help of these three lovely people, I think we're making a somewhat of a dent in the conversation. And I just really appreciate all of you getting together and us trying to figure this out and find solutions for our own sake and for our fellow Americans.
Making a dent is a good way of describing it. And I want to point the first question to you. This will be a very free-flowing conversation. This isn't going to be just a question and answer panel. But housing, you and I have a very similar path. Real estate going well, selling lots of houses. And then as you're selling lots of houses, you're also seeing this gigantic class of people that are being priced out. And you're like, wait a minute, I'm still making money, but what's going on over here? And you're absolutely right. You were one of the first people who started bringing a flashlight to this problem in this dark room. So, just give me a quick history lesson. When did this start, this housing affordability crisis?
I would say, I'm laughing because I bought a house top of market. I would say summer 2022.
Summer 2022. And what's happened since summer 22 to lead us to the problems we have today? Because that's now 3 years.
It is. I think, the rise from them lowering the interest rates during COVID, which I think might have been a good idea on paper, like, hey, let's lower rates, allow people to refinance. It's a tough time. But when you have 2.5%, 3% interest rate, it was a free for all. People started buying up a lot of houses. It shot the prices up. I think there's some reports as much as 50% in a couple short years. And then they had to raise the interest rates, but we've never had like this high of interest rates with this high of pricing. So even in the early 2000s, 7 and 8% interest rates weren't too shabby when the house you were getting was $172,000. But on a 450 house with an 8% just a couple years ago and like a 7-ish now, you need over 6 figures and even maybe like 150, 175 to comfortably afford this house. And as of 2022 till now, that's pretty much been the case. Housing has ticked up a little bit in pockets of the country. It's kind of gone down a little, stayed the same a little. There hasn't been much movement. I think we're in a very stuck market where sellers aren't really selling, buyers can't really afford, and it's a really, really interesting market right now. But the combination of the high prices and the interest rates is just unaffordable for the average American. It's changing our fabric of the American dream.
James, Tiffany, you're on the outside looking in the real estate world. Tiffany, I feel you have your head behind the curtain a little bit more when looking into investors and who's buying these homes. From the outside looking in, what do you guys see in the housing market right now? What's happening in your circles?
Well, what worries me is that we see this massive increase in private equity funds. A lot of people say BlackRock. BlackRock doesn't buy houses. They invest in companies that do. Blackstone, Vanguard. There are entire capital groups, more than 100 right now, that only buy single family homes and multi-unit homes, a lot of duplex, whole communities. And they're very, very focused on acquiring as much housing as possible. A lot of people think it's just to turn us into a class of renters. That is partially true. I think they are getting very comfortable with the idea of subscription model life forever. Nobody wants us to pay off anything, ever. The entire subscription model, I mean, everything in life has become a subscription, and they absolutely want that to be our homes for the rest of our lives. And for the young people that are facing down ever increasing capitalized interest on their student loans, that's where they're headed. They will still be renting when they die, unless somebody intervenes very, very soon. But simultaneously, a lot of these private equity firms are trying to fulfill a gap that they've created by over leveraging their existing assets. You can look at, I'm going to bring up something very of the moment, Blackstone's Real Estate Investment Trust. There's been a lot of talk recently about their recently departed CEO. And if you look, Blackstone had this really aggressive look taken into their real estate investment fund for their commercial properties. And when everybody went to working from home, somehow miraculously, their entire real estate investment trust portfolio kept going up in value. Now, private equity is unique in that they get to tell you what it's worth. They don't actually create real valuations. But there were a lot of the Financial Times, Fortune, Forbes were all taking a hard look at their fund and saying, why are you reporting increases? All commercial real estate is tanking. It was a fund that they had allowed everyday investors into, and they needed to make it they needed that money to keep coming because they were losing their hats. And they needed to shore up those funds, and they turned their attention to the private real estate market. They started acquiring everything because they need to bail themselves out. And housing is the most secure investment going back generations. But also, we need more of it. We're always going to need more of it because they control how much of it gets built, right? Through the commodities they control, through the assets they acquire, through the way that they cut jobs. In one way or another, they control everything about housing. Who's behind you, Zach? I just got so distracted. I'm sorry.
Huh?
Someone's behind you, and I didn't.
Yeah, that's Sean. Sean produces the show here. Say hi, Sean.
Sean.
I scooted out of the way. There's just a person. You just said job losses. You said job losses. You said they're controlling the assets on the market and how are they controlling jobs?
I mean, they're acquiring everything. And when a private equity firm that engages in pirate private equity acquires any company, they're going to strip mine the wealth out of it. And a huge part of that is by cutting costs. And you can lose jobs because they're on the first or second flip and they just need to use economies of scale and efficiency. I mean, if you look at jobs over the last 20 years in the United States, 99.9% of all jobs were created by small businesses. That's a fact. And almost all job losses were created through efficiencies at large corporations and acquisitions. So big companies get rid of jobs. They create efficiencies. They replace them with AI. They make cutbacks. They strip mine. And small businesses create jobs. That's what happens for the last 20 years consistently in America. Every job created is small business, period. Okay? And the more that they acquire these businesses or flip these businesses, the more jobs are necessarily going to be cut just so that they can keep their debt above water. And eventually, when they bankrupt that business, we're going to lose hundreds of thousands of jobs like we did this year. So this year, Joann's Crafts, Party City, Home Goods, that was 600,000 jobs gone in a month. 600,000 jobs, just poof. And that doesn't even touch all of the small businesses that relied on those stores to be the anchors in the parking lots that they had bought into that are now also going out of business because there's no longer an anchor store to bring customers to their small businesses, which is really the ripple effect that decimates communities. So whether they're manipulating through the acquisition of homes, or they're manipulating through their play in the market, or they're manipulating through taking jobs away from people so they can't afford them and decimating communities because they acquired the only factories there and then shut them down, like just happened with Pyrex and Anchor Hawking. They just decimated an entire community through their private equity acquisition. This is going to keep happening, and they control almost all of it. Looking outside in, they're going to keep buying homes because they want us to be a nation of subscribers. And we refuse to demand systematically across both parties that our politicians stop them from doing it. And so we unfortunately are complicit, either through a lack of education because they make it so hard to learn, or because we're just so damn tired because we're all working 3 jobs. I work 3 jobs. Okay? Because I pay legal fees to fight a private equity firm, right? We're all so tired. We're also side hustled. We're also exhausted. We're also overburdened. We're also desperate to just keep things going that we don't have the time to fight. And so right now, the outside looking in investment window is terrifying to me. I loved your video today on how they said, oh, there's so many houses for sale. Yeah, they're all in Florida because they can't get insurance anymore. They're leaving
by hurricanes.
They can't get hurricane insurance.
Yeah,
That's
Freddie,
why they're
you know
for
something
sale.
about that.
Oh,
James,
yeah.
James, pick up on that for me. What are you seeing from the outside looking in?
Yeah, I mean, I'm not as much of an expert in the housing market as you guys are, but what I see, you know, when I think about the American dream, it's part of the fabric of America, this kind of buying a home, raising a family, and this kind of thing. And if you say all of a sudden, oh, that's not possible, I think it's going to have a huge ripple effect in just how you just through culture and society and say, hey, we don't have an opportunity to do this. I was told, hey, if I go to college, I get a good job, this is what I'm able to achieve. And now all of a sudden you can't. I just think it leads to a lot of other, it leads to some really bad, it has some pretty bad side effects, like just, I think, more violence, just people being pushed to the limit. And you see, even with the case of Blackstone, I don't know the whole, all the details, but you're just seeing more and more of that kind of violence happening in America. And I think this is all stemming sort of from like, hey, people are just kind of being pushed to their wits end with the stuff that Tiffany's talking about, where, people are just on a treadmill, 3 jobs, barely able to make ends meet. And then now all of a sudden, wow, one bad thing happens. They break their leg, something, there's a storm, whatever, and they lose everything. And there's like, wow, now where am I left with? And I think that's just something that, the business model of private equity in general does not account for, is like the human side of things. Like, what happens when a community is decimated? What do people do? Their behavior. And I think that's something that's really troubling when you see like this nation and you see, destitute, poverty, and these kinds of things. And all these businesses, they're just like going away. But you see the private equity funds somehow are able to make money through this process of extraction from these companies, which is something I think we need to really grapple with as a country. It's like, do we want to instill some culture more than just trying to make money at all costs? I think that, to me, is a really big question that we need to answer.
Can I build on that for a minute? There was
The mic is open for all. Please.
There was a very famous commercial that happened post 9/11. I think it might have been Farmers Insurance, or it was an insurance company. And it said, on 9/11, hijackers tried to forever change the landscape of America. And it was an everyday America street. It looked like maybe Boston or a New England street. And it was a bunch of houses lined up. And then the next screen said, they did. And it flashed back to that screen. And every one of those houses was still there, but they all had an American flag hanging in the front porch. It was the single most impactful commercial of the decade, period. I was studying advertising at the time, and we did case study after case study about this commercial. And there were a bunch of studies that were done in America all across the early aughts and the 90s. And they said the closest thing in America we had to a national religion was our patriotism. And that the single most unifying factor in America was our belief in the American dream and our patriotism for our country. This is the first time in American history that our young people don't believe it exists for them anymore. And the same way that a loss of religion results in religious extremism, we are seeing a lack of empathy and an absolute development of apathy in what they're even here for. And if anyone doesn't understand how we have gone from that commercial with the fabric of America being changed into a more patriotic state and a place where people believed in one another across party lines to where we are now, if nobody sees how dangerous, how terrifying it is, how much apathy there is, then I think it could become too late for us to turn the ship around.
What does it lead to?
I mean, I always hate to answer this question. Systematically, historically, whenever any civilization, great nation, started to have massive fluctuations in the pendulum of divergent belief systems, you start like with a two-party system that swings like this, right? And you swing like this, and you swing like this, and you're right and you're left, but you come back to compromise. That's how our two-party system was created. It was designed that way so that both parties had to engage, so you limited extremism. It's actually quite elegant in its design. But historically, whenever you have this, if it starts to go like this, you get 6 swings, historically, before the civilization falls, either through evolution or through civil war. Right now, we're on swing 5. That's a terrifying place to be as a nation, and that just turns you into Rome. When your citizenry no longer believes that they need to believe in and buy into your civilization to no longer serving them, in my opinion, guillotines would roll, but they wouldn't be in DC. They would roll down Wall Street. I'm sorry, that's what we're looking at right now. You're seeing it with the United Healthcare CEO. You are seeing it with Submarine Gate. You are seeing it with Blackstone. Okay? I have never seen more unity across party lines in my life. And that should be terrifying to everyone. Everyone.
Yeah, I think between private equity and Jeffrey Epstein, there's been finally some things that everybody can agree on.
Yeah.
Maybe we can work in our Middle East relationships as well. Some now bipartisan, finally coming to some agreement. James, what were you going to say?
Yeah, I think that's the core of the issue is that you see all of these things happening in Congress, but it seems like none of these laws or executive orders do anything for the people, and it's all aimed at donors or the elites, Wall Street, right? This new executive order that Trump issued with the opening of 401ks to private equity, which I know that, Tiffany, you're going to get into more, as well as all the other, in the big, beautiful bill itself. I think there was just so many giveaways to the top. I know they had the thing with the no taxes on tips. That was maybe the one element of it that you could argue was for regular people. Everything else is for the elites. And now with the Epstein thing, it just seems like, okay, so are you going to do anything for us? And if you start to lose faith in the government, that will lead people down some dark, dark paths of extremism when you see nothing is happening. So I hope they get something done in Congress as far as, like, for example, the investment, or should Congress people be allowed to buy stocks, right? That there's a new, I think it's bipartisan legislation, to your point, Tiffany, that they're trying to work on in terms of outlawing congressional members owning stocks. And it's like, hey, the only thing that's for is for you guys to get rich. So it's like, are you just going in to make money, or are you going in to serve your community? And I think we need some things like that to be passed very, very soon, or else I think you're going to see more and more of these situations with, the Blackstones and the United Healthcare CEO. These things like that will continue to happen, which, I think people do get used to that kind of thing. But it's just, when you live in a country that just seems like, oh, everything is kind of falling apart, it's not a comfortable place for a lot of people.
And it's really sad that we've gotten to this point because they're just taking just a little bit too much. That's what's also crazy, is it's not as much as people think. It's a maybe 10 to 15% difference from the top 1% to like the rest of the people, and then we'd all be living in harmony. We'd all be less stressed. There'd be less hate between I should say beef between the top and the bottom. And it's just like that little bit of greed. But a lot of it also has to do with the system. And I think that's what I want to even do a better job at doing, is trying to help educate not only myself, but the audience about what are out of the box economic policies that will actually help. Because even when people say like tax the rich, it's just kind of a headline.
Mm-hmm.
Yeah.
Even if you were to tax them and you got an extra 300 billion, it would just be spent poorly with the government and nothing would change anyway. Like there needs to be specific changes, specific funds, and they need to get back to making the American people happy, and we'll still make money. The country's going to flourish. And that's what pisses me off the most, is that we're not at the extremes yet with the bread lines and the yachts. Why do we have to let it get there? Like, let's just get this taken care of in a decade and go live our happy lives like we did in the 90s and early 2000s, where everyone loved each other. We were actually celebrating celebrities and rich people. It was cool. Then it just took this dark turn, and it's just
Cribs.
uncomfortable.
I love that show.
Cribs, yes.
I loved Cribs.
Yeah.
Because it felt attainable. It felt like you
It
could
felt
one day achieve that.
possible.
Yeah.
Right.
Or if
And
you
now
did
you're
it
just like,
Every
it.
person supporting a billionaire's lifestyle is a millionaire in waiting in their brain.
Well,
Yeah.
and if I was sitting in a $600 apartment that I paid for in 1 week's of work, and even if I never thought I'd have a yacht, my life is good. I'm paying $600 in rent, or I just bought a $120,000 home. My payment's low. I'm hanging with my
$10
kids, going
bag
to
of
dinner.
Taco Bell with 4 tacos in it.
Yeah,
What should
so we
bother
didn't
you guys
care.
is that these private equity firms are getting affordable homes. They're buying them in bulk, and so the builders are doing them at deep discounts. And then they're turning around holding them for a year, and then they're selling 3 of those homes to themselves in a different fund to create 3 comps that elevate the price, and then they double their money.
And they do, not to get too complex, because Tiffany, I know you can go in depth on this, but that also happens with companies being sold within private equity, right? When I think that was the drama with Harvard, is Harvard was trying to sell off something they had purchased and now looking to sell. No one buys. And so another private equity firm steps in, buys it off them. In exchange, they buy something off of the other private equity company that they're not able to sell, creating this swap, creating value because it's sold at that price. And you're saying that's happening in housing too.
But even the financial side, so yeah, it is happening in housing largely with like private equity owned real estate investment trusts, almost entirely. They're also doing it with commercial real estate, but it's something called the secondaries market. It's where they tried to sell it at what they deemed the fair market value, which had to be a number bigger than they bought it for and big enough to stack more debt on top of it. And at this point, none of these companies can sustain any more adjustable rate debt. They just can't. That's why we've had record bankruptcies of private equity owned companies 3 years in a row. Because all of the debts, and when I say adjustable rate debt, just so you guys understand, when these companies acquire the brands, okay, like Jersey Mike's just got bought by Blackstone.
Boo.
The way that I fought, the way I tried, the way I wanted to save Jersey Mike's, okay, they just got by Blackstone. They got bought with adjustable rate debt. But let's talk about the sub shops before them. Jimmy John's was bought by Rourke with adjustable rate debt. And so was Subway for $9 billion of adjustable rate debt. And so was, we can go down to like Arby's by Rourke for adjustable rate debt.
How's Quiznos? Is Quiznos still out there? Are they owned by private equity?
They're private. That's
You
what
have
killed
to have
them.
seen my videos on Quiznos.
I didn't. I was hoping
Oh
one
my
of the
gosh,
sub shops was still
I have an
alive.
actual series on Quiznos, which started private equity. It literally started all of this horror.
I
But,
did not know that. Quiznos was the opening door.
It was
Yes.
the opening door in the franchise world for private equity destruction.
Huh.
Yes, they pioneered it, and they bankrupted 4,900 small businesses in the process, and resulted in the loss of multiple lives in the process. It was horrifying, and not like livelihoods, lives. People died, and they're an evil company. And then they took all the money. Texas two-stepped it to another company, and left all the debt with the original company, and they used that money to build Smashburger. And then they cleaned that one out. It's disgusting, and sold it to private equity. So anyway, my point is, they're buying
Smash
this with
burgers are kind of the new sub shop too. That's like a popular thing.
so they're buying this with adjustable rate debt. But what you and I think of adjustable rate debt, like back in the 90s, it was, oh my God, it went up to 9%. Oh my God, it went up to 9.5%. I have seen billion-dollar loans documented at 17 and 18% right now. I have seen distressed billion-dollar loans at 21% right now. Like, we can't even fathom the amount of debt they have stacked on these companies so that they can do the strip mining and just hope they strangle along. Like, literally, they're drowning under the weight of this debt. It is collapsing the economic system. And they've bought up, in some cases, more than 50 to 60% of entire industries. Veterinary care, gone. All of it, gone. Most of nursing homes, approaching 40 to 50% in many areas, right? Emergency rooms, in some areas, 100% acquired, right? Pediatric care, in some areas, 60 to 80% acquired. It is so hard to articulate, like, how egregious it is to know that everything we rely on as a society economically is currently drowning under 16 and 18% debt, and we don't even know it. But think about how you could pay for a house if it went up that high. Could you? If you were making your bills at your standard 7 or 6%, you're like, I can do this. And then it started to go up over the next 3 years while they were systematically taking your employees, selling off your assets, selling off the real estate, so now you're paying a lease. Eventually, your family would lose everything. This is happening.
Which is essentially what happened to families,
scale.
to bring it to something that maybe everyone could relate to. 2008, that's what happened.
Yes,
These people had
that's what
adjustable
happened.
rate mortgages. They could handle it, and then all of a sudden they couldn't.
And that is why I made I had a video that's, I think it's at like 30 million views now.
That one
That was
crazy.
like the 08 crash is happening in private equity right now, and nobody sees it. And when I tell you, when I made that video, I prayed I was wrong. I was dying for an economist to come tell me I was wrong, any economist. And instead, a whole bunch of world famous economists took my video and were like, she's right, I looked. And I sat there like,
oh man. Well, to add
me?
yeah,
Why are
Nick,
you talking about this? Where were you?
you talked about Blackstone. So Blackstone, yes, they're the number one owner of real estate amongst the private equity firms, over 300,000.
No,
and
they're the number one owner of real estate in the world on single family homes.
Correct.
Not just among private equity firms,
Absolutely.
in the world.
And they do it too without going and buying. Like, I'm never going to get contacted by Blackstone, right? Freddie's never going to get contacted by Blackstone.
Sure you will.
But
yeah, it's just through a broker.
Yeah, it's down the line. They get
Through a
contacted by
broker.
Invitation Homes, Tricon Residential. I think it's Silverleaf over in UK, Home Builders of America, or Home Partners of America.
Yeah.
And it's not just housing, is what you're saying. Just to be clear, it's everything.
It's everything. It's everything, and it terrifies me. I actually think they're going more and more into housing to prop up everything else because they're in real trouble. See, the thing about private equity funds that make today so dangerous. Today, for anyone watching at home, President Trump signed an executive order. I'd been begging everyone to contact him to stop for the last month. He signed an executive order that allows your 401ks to now add private equity into your target funds without disclosing it's private equity. They don't have to say they've added private equity. They just say your target fund is 2065, and they can put in whatever they want. And what this order also does is makes it so you can't sue them for it when they lose all your money. And the thing about private equity that makes it so scary is that they operate in 10-year funds, okay? Within a 10-year fund, they'll get $100 million, and with that, they'll buy $10 billion worth of stuff because they're going to borrow the rest from pensions. Because why not?
Leveraged
Why
buyout.
not, right? So they're going to get $100 million, and they're going to buy $10 billion worth of stuff. And during the life of that 10-year fund, they have to sell all of that stuff back 3 times. All the money will turn over 3 times. So they'll buy a company, they'll extract a bunch of money out of it, and they flip it 3 years later. And then they buy another round of companies. They extract some wealth out of it, and they flip it 3 years later. And then, if they have time to squeeze 1 or 2 more, they will. Or they will wind down that fund and just let it sit. And during that time, you're going to pay them 2% for all of the money you invested. And then you're going to pay them 20% on every dollar they say they made you.
The
Okay.
220 model, right?
2 and 20 model. Super dangerous when a 401k is standard at 0.5%. So normally be a 0.5%. Instead, we're at 2% and 20%. Okay. Studies show that when a small investment is invested there, you're going to pay 60% of your returns back in fees. So you're never going to get what you would out of the stock market, ever. But you don't see what's happened in that fund for 10 years. It's why they're so attractive to pensions, because all pensions are underfunded. And so they can give $1 billion to a private equity firm, and they say, we're going to give you $10 billion back. And they put $10 billion on their books for 10 years. And then 10 years
Just
from
more
now.
money out there on
And it
paper that
looks
doesn't
like it.
actually
For 10
exist.
years, it looks like there's $10 billion there. And then the funds come in. And suddenly that fund is once again underfunded by $8 billion. And they made what? Nothing close to what they would have in the stock market. But for 10 years, everybody was off their back because it looked like they were good.
And I want to
They got
direct
to
people to
get down the road.
your social media pages, your X, your Instagram, your TikTok, because you made a great video on the 401k situation, and that was before it went through. We're now sitting on the eve after it has gone through. So you're saying
one big question
we're
that
kind of
people
setting
have,
up like a 10-year time bomb. But James, sorry.
No, I was just gonna bring up the questions that I've gotten about this issue, because people have been talking more about, hey, what should I do with my 401k, right? Because you made that video, I've made a similar video, and in the comments, people are like, do I have to do it? What type of disclosure is required to say, hey, these are going into private equity, these are going to normal, let's say, like mutual funds and other things like that
Bonds
that
and
a
stuff.
401k typically goes into, index funds. What do we actually see if you log into your 401k portal? Will it say like, hey, a percentage is allocated to private equity? How does it appear to the consumer?
So right
That's the big
now,
question.
I'm going to tell you the language actually came in worse than what I thought was going to happen. So basically, they were going to open the fund so you could invest into crypto or you could invest into private equity. Okay. And the crypto market lobbied hard for that. And the private equity funds have been lobbying for this for 7 years. 7 years. Through 3 administrations, they had been begging for this because they saw the writing on the wall. Okay. They knew that their model was unsustainable and they would need more money. Right now, the private equity funds in the US have $3 trillion in unsold assets they can't unload right now. We think it could be as high as 4.8, but we know of 3 trillion that's marketed that they cannot sell because no investors will give them any more money. The returns are no longer there. So now they need the 401ks to give them the money to do this. And 401ks are a $12.2 trillion market. There's a lot of powder there. So what it came in with is that they're now allowed to be included in target funds. What I was hoping for was that it would make it an option so at least people could choose it. They were going to dress it up and make it look attractive. But what's worse is that they put it into target funds, which means that instead of you saying, yes, I want private equity, you're saying, I want to retire in 2053. And they go, we've got you. And that the law, the executive order is written, makes it so you cannot sue them if they mismanage your funds in private equity. Right now, what has stopped them, they've always been able to do this, but what has stopped them is that you can sue them for your losses. And they knew it was too risky.
Well, these companies are still a fiduciary, right? In the sense that
they are a fiduciary, and
they're
now
responsible for your investment.
They are responsible for your investment. But right now, what has stopped them from investing 401ks into private equity has been the risk of being sued. This executive order not only allows them to be lumped into target funds without you knowing they're in target funds and without possibly your ability to exclude them from your funds, but it makes it almost impossible for you to sue them if they lose everything investing them there, even if they have a conflict of interest and their other investments they're managing are losing money on those funds and they need to shore them up. And so what scares me is it goes back to what I was just saying, is that for 10 years, you can't see what's happening. And so it could go on for 10 years that it looks like your investor is killing it for your 401k because the private equity firms are lying to them. Because they need this capital.
It'll work as long as the next company will come in and buy this at whatever price they've marked it at. But
that's not happening. That can't happen anymore.
Well,
so they need the 401ks to buy it.
They need the 401k money to come in because what it sounds like is essentially a Ponzi scheme. Is it not very similar to a Ponzi scheme?
That's
you just
what the
need
Financial
more money
Times,
coming in.
They called it a pyramid scheme. The Financial Times has called the secondaries market a financial pyramid scheme. The Financial Times is like the black book on really looking at, and obviously it's very opaque, right? We can't see inside everything. But even the Financial Times can't at this point look away from seeing how much trouble private equity is in with its use in the secondaries market and the abuse that's happening there.
So essentially what's happening here is they are leveraging the retirement accounts that exist in our country to access more money that they can invest into other items because they've essentially run out of money and or run out of buyers.
Well, I
for
think
what
they
they're
need
No,
to
I
doing.
think
exit.
they're going to be
The business
flipping what they
model is
already
like you
have
need
that they
to
can't
exit.
sell.
Say again, James. Sorry.
Good.
The part of the private equity business model is that they need to exit. So like without the money to exit, these things aren't valuable because they are obligated to return money to the people who have invested in this fund. So they say, hey, this is sometimes it's a 10-year horizon, sometimes it's 7, depending on the fund. They say, okay, at the end of this time horizon, we need to exit out of these companies. So now if there are no buyers, they can't exit. That's the big problem. That's why you need fresh capital to come in and say, okay, now we're going to be able to exit to this pension fund, or we're going to exit to this endowment, or whatever. People can come in with dry powder. So that's the issue.
And
I
right
think
now, we know for a fact there's between $3 and $4.8 trillion in stuff they need to close out to close their funds, and they can't close it.
And that's right
Nothing is
now. And what
working
you're saying
right
is
now.
that the time bomb setting off for the next 10 years, it's only going to get potentially worse.
Because now they're going to buy all this stuff in a secondaries fashion, and the secondaries market. See, if the business were worth it, it would sell. They could take it to IPO and they would get their money out, which they know they can't do because it's so over leveraged, or they would be able to sell it. But none of that is working anymore because they are so overly debt laden that having $3 to $5 trillion of these assets that they cannot sell in the open market at fair market value now going to the secondaries market is entirely speculative. It is only self-serving. It would be like, I need to sell my house for some reason and Freddie needs to sell his house and nobody will buy him at the price we say. So we agree to trade him with each other for $100,000 over asking just so that we can use those as comps to sell our houses down the street. It wasn't worth that. And what's about to happen is, and this is where Harvard and Yale are good examples. So Yale pioneered the investment in private equity as an endowment strategy. Okay, they started doing it 25 years ago. And they're trying to offload $8 billion in private equity investments because their returns right now over the last 3 to 5 years are 5.5% to 7%. The S&P 500 has outperformed them by multiple folds of that, okay? And the problem is the 2 and 20 model means that they're paying $1.5 billion a year in maintenance fees on this private equity investment, and they're only getting 5% returns. And they can't sell it. No one will buy it because it's over leveraged and nobody can get out. And now I want to say what I always say. In America, they tried to sell the Harvard model. They literally released an article. It was Forbes or Fortune. And they said, if you buy in, they created a secondaries continuation fund that Americans could buy into. And they posted this and promoted this article and said, you'll get 1,000% windfalls that will make your brain melt. That was a headline in Fortune magazine. If the rich had 1,000% windfalls at their disposal, they wouldn't be sharing them with us. But just like 2008, what's happened is that they kept all of the reins when the returns were good as they strip mined America for private equity boom years. And now that the risk is too high and the debt is too high and it is faltering, now we're going to socialize the risk.
Free market socialism. We love it.
Privatize the benefit. Now we're going to socialize the risk. And now it's our turn to bail them out. Trump can't give them a traditional bailout, but this secondaries market getting access to our private equity is a $12 trillion bailout, period.
And as of March, they had begun conversations around, and I'm sure privately they were going on for a while, private equity bailout. The potential of private equity who has their hands so deep into our stock market, our retirement accounts, our businesses that run our job market, that if we let them fall, that they're pretty much too big to fail. It would crunch our economy. So
isn't it amazing how we let businesses get too big to fail, but no American is?
So I guess that's
No
where my
community
brain
is.
gets to all the time. I know you guys do this too, where you run through the maze in your brain. Okay, we're here. Okay, if we take this right and we go down this direction and then we take a left, where would that go? And then you hit a wall and then you go back and you're like, okay, well, what if we took a left? And then we turned around and did this here and we double teamed that. And then shit, it's another wall. And I play that game a lot. And it seems to come down to that at the base level is we have these companies that are sucking the life out of Americans' pockets, that are sucking the American dream away from the next generation. And the only way that we can stop that from happening is by allowing the system to topple,
Yes.
allowing it to crumble.
That's how capitalism works. The problem is we keep giving socialism to corporations, and all of the Americans have to deal with all of the fallout in capitalist consequences. Americans suffer capitalist consequences. Corporations get socialist bailouts. And Freddie knows this better than anyone after the '08 housing crisis. Okay? One guy went to jail. Everybody cashed in $100 million bonuses, and Americans lost everything. They lost everything.
Families get foreclosures, banks get bailouts. Freddie,
Right.
you want to add in on that? Haven't heard your beautiful, sultry voice in a second.
I'm actually just learning a lot right now because I was new to this whole private equity getting together with the 401k. So I appreciate the education on that. I'll have to look into it more. And so you're saying that's a done deal?
He signed it last night.
Thought you were about to throw up.
I'm going to
Oh,
encourage
no, that would have been,
every American.
yeah.
He should, though. Every
Just dramatic.
American should email their 401k managers now and demand proof in writing that they understand that you do not consent to any private equity investment, even in a target fund. Right this minute, create your documentation. Every American.
And you're saying send an email in writing to your 401k manager, whoever that is, saying I don't want
Whoever
to
it
be
is.
involved in any
Today.
target
You know,
one thing that's-
funds. with
One thing
private
that's really interesting that I saw is that currently you're talking about $3.6 trillion of unsold assets within the private equity space, but I'm also seeing record levels of aged dry powder in funds in private equity. So it's interesting that these funds themselves don't want to buy into these companies, but they want the 401ks to come in, which means that these assets are not worth what they're saying it's worth.
Exactly. It's sitting there doing nothing because they know the risk is too high. Even they know the risk is too high because it's all speculative at this point. The secondaries market has increased by 100-fold in the last 3 years. Did you just have Rachel on your podcast, James? Rachel Wasserman?
Yeah.
Rachel is a dear friend of mine, and she and I have talked endlessly about this very concerning development of the secondaries market, which is essentially a Pokemon trading club for companies and assets.
Not as fun as Pokemon trading, probably.
Yeah, no.
Maybe for them.
I mean, and what you have to understand is, like, 401ks are a big risk because 401k managers, they don't get wealthy managing 401ks at, like, the lower, like, consumer level. You're not going to get wealthy like the big boys. But what's about to happen is these private equity funds are going to offer commissions for including their funds. And they're getting 2 and 20. And they're going to offer a share of that. And for the first time ever, 401k managers are going to move from being able to make 0.5% to being able to get a share of that 20%.
Now
And
they're
it's
getting in
gonna
on
be too
the interest loophole.
Oh,
Yeah, the carried interest loophole. Which, for those who don't understand, we're mentioning a lot of terms. 220, they make 2% off the gain, and then 20% on anything that's past a certain margin. I think is how the law
they
works.
make 2% on the original investment. You
The
just do that in
original
maintenance, and 20% on the gains. 20% on the gains.
So 2% total, 20% on the gains, and
2%
then
annual. Every year
annual.
you pay 2% for that whole 10 years.
And then when they eventually sell and cash out of that asset that they purchased to flip, the private equity firm, takes on capital gains instead of actual income, which is a lower tax bracket. And that's a lot of where that carried interest loophole comes in. So that's where I want to kind of pivot the conversation a little bit to, there's certain things like taking away the carried interest loophole. There's certain answers to fixing what's going on right now in the private equity space. I don't have to get into, I have all these notes on how it's belittling the everyday Gen Z and young millennial. It's keeping the gateway drug of wealth of homeownership out of reach. And it's slowly piling up in grocery carts and mechanic shops and everywhere else. It's slowly stockpiling on the American consumer. A lot of people think, okay, this is just going to keep happening until it's too much. Let's assume we don't take that route. The eventual guillotines getting brought out. How do we end at some part of the maze that isn't that end? Are there solutions? What can be done? Who can be talked to? What can be written to change what's happening right now? Because it seems pretty clear from these three very smart individuals I got in front of me. I'm not stupid. I might be a little dumb sometimes. I'm not stupid. Like, we have a good amount of brain power going on here to say, yeah, it's not going a good direction. So how do we shift it?
Freddie talks a lot about the importance of needing actual laws and not just talk. And I agree with that. Trump came into office saying he was going to close the carried interest loophole. It was in the first draft of the big, beautiful bill. And when I tell you, private equity firms created an advocacy coalition, a PAC. They poured hundreds of millions of dollars into it. And then they ran ads talking about private equity is making your lives better. They descended on DC and they increased their donations to DC by like 240% in the first quarter and the second quarter of this year to try to stop it. And in the second draft, it was removed. I begged people to contact senators and get it back in there. No one in the Senate had the huevos to do it. And it was stripped out. And then suddenly Trump pivoted to let's give them a bailout with your 401k. I'd like to know where all those donations went. I want to know who got them. Because we went from we're closing the carried interest loophole, I'm done with it, we need to pay their fair share, to I'm going to give them your 401k to bail them out.
That is pretty, when you put it that way, that's a pretty big pivot. Yeah.
Right? And they've been 7 years, private equity. They tried to do this with him in his first term. And he was like, nope. He said, absolutely not. He knew it was a bad investment then. And even Biden, who had a board member of BlackRock as his senior economic advisor, said, nope, this is a terrible idea.
I think multiple BlackRockers involved in that.
He had 4 on his economic councils between them. And even he was like, this is a terrible idea. And then Trump was like, we're closing the carried interest loophole. And now this is where we are. And we're not only are we not closing it, we're going to bail them out with your money so they can keep getting paid. And like there's so many common sense solutions out there. Like, Freddie, if you advocate for nothing else in this world, we need to advocate for getting corporations out of the housing market. I don't mean like, oh, they can only own 10. They would just create 100 LLCs as a cost of doing business. Like, we have to have disclosures and transparency up the food chain to who is the shell corporation that holds them. 2, we need to change the way that we incentivize business tax incentives. In my opinion, the most harmful thing we do is we give corporations no taxes to come to communities. Oh, you're going to build a new Amazon warehouse here? We'll subsidize the building of it. We'll take all your taxes for the next 12 years. And then you can lobby for us to take them for some more. And then you're going to come here and you're going to say you're going to make 10,000 jobs, but then you're going to robot everything and you're not going to make any jobs and you're not going to pay any taxes. We need to change the way we incentivize business tax incentives so that they only get business tax incentives for reinvestment into higher wages, communities, building in America. We are incentivizing all the wrong stuff, all of it. Like, we need to create conditional parameters for tax incentives. Be the easiest thing to do in the world. And when I tell you every corporation in America would come out screaming against it, because corporations don't create jobs. Small businesses do. I mean, they're corporations too, but like large corporations do not, like I work for the American Small Business League. I do a lot of advocacy work with them. And nobody believes us when we say that 99.9% of all jobs are created by small businesses going back 20 years. But if you ask Siri or ChatGPT, they will confirm it for you right now on your cell phone. You know, it's a huge deal that we give tax incentives to mega corporations that small businesses don't get, but they're the only ones that are creating job growth in our economy, period. You know, and I don't understand how those are such common sense solutions. It's the smallest thing. Closing the carried interest loophole, common sense solution, right? Don't give tax incentives for people that own investment properties. Get rid of them. Start taxing their investment revenue. Tax it. If they're going to rent out that house, make the taxes
100%.
so high that they need to sell it back to regular Americans.
100%.
These are common sense solutions.
And I think what we need for these solutions to be implemented is we need a societal narrative and all of us to be enlightened that we are going to put the people first over profits, and not in such a way that it kills our economy or kills our competition. But right now, all of the narrative and all the propaganda, they're never really talking about the country like us as people. What they mean about our country's doing well, all the elites and the media and the politicians are talking about capitalism. And I think, Tiffany, I think it was you that said it, like, capitalism is a math problem. Like, it has nothing to do with people. And we need that to shift, and the people in power to shift and vote people in that are going to stand up. Because yes, it's a win if we can get rid of the carried interest loophole. That's a win. Or if you can get this little thing or this little thing, but it's just all going to keep the system broken. It needs to be a full-on reorganization of putting hope and care into
like a
people.
New Deal 1933 type.
Yeah,
we
but
oust
without
all of the incumbents. That's what we have to do, and the next generation has to be more educated.
And just without the bullshit. Like I think we're all just exhausted of the politicians. I'm tired of the headlines. I'm tired of it's just all like us going around in circles, and we need some true leadership. We need to vote everybody out. We need to heal the country politically so we can actually talk together, work together. And with our businesses doing well, we should be rooting for the businesses, but we feel like they're stealing and not paying enough. Like we all win when we all win. And even to put a button on the housing thing, for me, the housing isn't even about the math problem anymore. The housing, I think James said it earlier, it's a cultural thing. When you own a house, you have a feeling of hope, especially if you're not spending $4,000 fucking dollars, but it's actually like affordable. Yeah. You have hope. It's a step in the right direction.
Speaking of all that hope, Fred, not to interrupt you, I'll pass it right back to you, but any area you go to, if you have a street that's doing badly, you have a crime-riddled area, low poverty area, the first thing you do is you build houses for purchase and get the high level of rentals in there out. Because when people own their grass, they care about the town.
Yeah. But that's the thing about it. I'm like, why wouldn't you want, as America, to be the narrative of like, let's figure out how to build houses, make it affordable. Let's do things. Like I'm working on this video right now, and I have to triple check my work. Maybe you three will know this answer. But I was thinking to myself about property taxes. And I think if this is correct, owner-occupied homes pay about $300 billion a year into property taxes across all 50 states. And I'm thinking to myself, imagine if we did a tax credit, if you cared about homeowners. $300 billion is a lot for the government, but also not for the government. But something as simple as that, or how do we raise $300 billion that would have owner-occupied primary residents no longer have property taxes and give them ownership? Again, it gives us a finish line that we can actually own our house, have it paid, and it's mine forever. Where if we're moving to the subscription-based model, you never feel like you can get off the rat race until you die. Because if you can never own your car, if you can never escape taxes, if you always need money, can't we just like win the game and just owe nothing at some point? That's not the case. We're getting more and more.
James, you brought this up. Tiffany, you already brought up the lobbying side. But Fred, you just said it. We got to get everyone out and start over. That honestly, I think you got to drain the pool. You got 95% of our lawmakers being funded by PACs that aren't even in our country. You have lobbying efforts by multiple billionaires and banks and private equity firms keeping rules the way that they are for one reason or another. You got to get people who are, James, to your point, people that are in there for people, not profits.
Yeah,
and that goes right back to one of the first conversations we had about them talking about them being able to invest in stocks.
Right. I know our conversation today is focused on housing and things like that and not on Middle East affairs. But I think that's one of the things that people are noticing that's screwed up is why are we sending so much money overseas, whether it be to Israel or Ukraine, when you see your streets crumbling away, you see homeless people everywhere. It's like there's something inherently wrong with the system. And why do you think we have a convoy of our representatives going overseas to Israel? It just looks very, very weird. It's like, who are you guys actually serving? Are you here for the people? Are you here for America? And that's one of the things that the big questions, one of the big questions that I have that I ask a lot of people when I interview them, especially, cultural figures, politicians and things like that, is like, what does it mean to be an American? Do we have some kind of cultural tie that binds us all together beyond money? Is that the only
That's literally what I was about to say. It's money.
That's the big question, right? Because I was recently, this is when Trump first started doing the tariffs, and I had the opportunity to speak to a CEO of a Chinese company, and they deal with like raw materials, and they do a lot of exporting to the U.S. For building stuff. So I was like, hey, this is going to be a huge impact on your business. Like, are you going to do layoffs? Like, what are you going to do? Because she was talking about, hey, I also have the same pressures that you guys talk about with like, hey, I need to increase profits quarter after quarter. And I'm like, well, this is going to be a huge challenge. She's like, yes, it is. So I was like, hey, what's on the table? Is it layoffs? She's like, no, we're not going to lay anybody off because at the end of the day, we're Chinese. So we are going to take care of our people first. So we're going to find our way. We're going to figure this out one way or another. But I thought it was like, wow, I don't think I've ever heard an American CEO speak in that way to say, hey, no, we're Americans. We're going to take care of each other. I know times are going to be tough, but we're going to figure this thing out. The first to go is always just, oh, yeah, we're going to lay off a bunch of people, shoot the stock price up. And I'm just like, that's just not sustainable over a long period of time.
Buy back some stock,
So, like,
give some to the executive team.
One person, once upon a time, well, there are people that do that, right? Like King Arthur Flour, or like there's companies, Red Mill, ESOPs, Public Benefit Corps. There are companies that do that and give themselves cover. But once upon a time, there was one guy who did do that, and it was Gerald Ford. And I talk about this on so many podcasts. I think I talked about it on yours, Freddie. That Gerald Ford wanted to take care of his people. The Dodge brothers.
Henry Ford.
Henry Ford, not Gerald Ford, though, not the president.
Gerald Ford. Henry Ford.
I was about to say, wow, two different Fords with a similar story. That's crazy.
Henry Ford, thank you. Henry Ford wanted to do that. And the Wright brothers said absolutely not. And they sued him because he was investing in people. He was
Dodge brothers.
Wright
brothers made the plane.
The Ford brothers. Oh my God. One of my Dodge brothers.
Live television.
Television, sorry. So Dodge versus Ford, I talk about all the time. The Ford Motor Company wanted to pay higher wages, but not just that. They went further. They were investing in streets because they wanted people to drive on them. They were building communities so that people could get around, right? The same way Michelin started creating the Michelin Guide so that more people would drive on their tires, right? Like, but Ford just didn't want to lose employees to the Dodge brothers. He didn't want to lose employees to them. So he wanted to be the better employer. He wanted people to want to live in the communities where he was building his factories. And he started investing in roads, schools. He started giving benefits. He started hiring doctors to take care of his people. And the Dodge brothers sued him and said, you can't pay better wages. And what they had to do to sue him was buy one share of Ford Motor Company. And they sued him as a shareholder, right? And said, you cannot pay higher wages. You cannot build roads. You cannot build schools. You have to serve me, the shareholder. And they won. And that has been the controlling case law in the United States for generations. And it gives every CEO cover to do the disgusting things they do. But if you are starting up a business, you can do better. You can establish yourself as a public benefit corp that puts the needs of the public interest you serve before the shareholders. You can create an ESOP. It's an employee stock ownership program. I'm a kinder music teacher, right? I'm a certified accredited kinder music teacher. Kinder music has been approached by private equity firms. They've tried to buy every kids' music school franchise, okay? And kinder music is an ESOP. It is entirely educator owned. So the teachers own the brand, okay? That's why kinder music is so amazing. If you guys are looking for someplace to take your kids, go to kinder music, because it's never going to fall into the hands of private equity, because they put the kids first by making the educators the caretakers of the program, right?
Yeah, by giving the labor force behind the productivity ownership in the company. I think a lot of people said that's a great long-term solution to fixing the problem.
And there's other companies doing things like that. It's either Red Mill Flour or King Arthur Flour did the same thing when the owner was going to pass away. There's big, like, you guys have like Buc-ee's in some parts of the country. Up here in the Northeast, we have Sheetz, Wawa, and Royal Farms. Okay? Wawa, I want to say, is Royal Farms is an ESOP. Wawa has an employee ownership program and has a community reinvestment programs. So, like, there are good choices you can make, but for the companies out there, they don't have to be evil. They're just not making the right choices before they establish themselves. You know what I mean? So we can seek out those companies, but we can also give better tax incentives to those companies. There are so many things we can do.
Yeah, better tax incentives for those that are taking care of their employees. That makes sense.
And reinvesting.
let's round up toward the end of our conversation here. Actionable items that we see that are approachable today. You know, we talk about, okay, you own a company, get the employees involved in the ownership. Okay, you're looking to buy a home. Hey, you might get priced out, but that's just what it is. Like, what can someone do? Like, if they're looking at their 401k right now, like, should I move all of this into gold and XRP? Like, what should I do right now in terms of at least protecting myself or creating a better future? What can be done now? I'll start. I think, and Freddie, you and I brought this up. We're going to name this the Freddie Faust bill, and we're going to present it. And we should have a take a home, make a home program, an investor ladder. Anytime an investor buys a property that they plan to profit off of, that they don't plan to live in, whether Airbnb, rental, flip, they have to pay a fee at the closing table. Not per month, just the one time, doesn't mess with their cash flow. 2%, 3% at the closing table. And if you did that for every single investor purchase in America for the last 2 years, you'd have over $500 billion in that account. And now you can give $10,000 to $15,000 to millions of potential first-time home buyers across the country. I think that's a simple, move it in, tax them properly. Now we can fund something else. That's one. What are other items that we could attack together as a country for the betterment of the future of our country? Because having a daughter, it changes your perspective a bit. Because now it's like, okay, when she's 18, what career am I prepping her for? What kind of life is she going to be living in that day and age? What should we be saving for college? Should she just be homeschooled? Like, there's a lot going on. And I think the parents' life, it's weird right now, especially young kids. It's weird. Like, what do we do now to protect and perpetuate a good future for them?
I'm going to be honest, given everything I know about private equity, just doing a tax to create a fund through investor owners would just drive up the cost of doing business, and they would build it in. That scares me.
Run that back again. Run that back.
So in my opinion, if we made it so investment properties created that fund, I think it's a good idea. But all that would happen is they would start to build it in as a cost of doing business, and they would pass it along in fees, or they would increase the prices in the ways that they charge the rent. And it would become a new cost of doing business.
Well, if the price, so you're absolutely right. You're absolutely right. But if they did increase the price to supplement for the fee, the price of the home would go up, and so too would the money collected from the fee.
So it actually would lead to getting a new home, and then the fund would take it further out of reach.
It could, but also as the seller, it also could lead you to want to sell your property to someone who's not going to have to incur that fee.
I agree. I think that incentivizing not selling. The problem is that right now a lot of people think they're selling to people because the small, what are called consolidator funds that are feeding BlackRock, they send out people to pretend to be real people. And they're buying them and flipping them a day or two later to the consolidation fund that then sells the entire portfolio up, right? So a lot of people wouldn't even know until it was too late, and they would manipulate it. I think we need to get corporations out of housing.
I love that. Right there. We could just stop right there. Private equity corporations out of home ownership. Somebody had brought up a really cool idea that we cap home ownership to a certain amount of units, which, to your point, I've always brought up, well, they're just going to get a bunch of LLCs and pretend to be 1,000 different people and do it anyway. But their idea I thought was very interesting. They said you can keep corporations for the tax shelter. You can keep corporations for protecting of your business versus your personal life and your accounts. You can keep the corporate veil, but you can't purchase the home under that corporation. You can transfer it to it, meaning you have to purchase under your name with your social security EIN, and then it is then trackable, and that's how you could put a cap of home ownership. But again, now you have BlackRock people going around pretending to be different people, moving it around. They're always going to figure out another way. Freddie, James, like, solutions. What's on your brain?
Well, for me, it's kind of, this is why I do what I do, is I'm trying to educate people. I'm trying to help people unlearn propaganda, because one of my favorite
quotes, a great job of it, by the way.
Thank you. I appreciate you saying that, Zach. And one of my favorite quotes, I'm not going to get the quote exactly right, but it's that Mark Twain quote, which is like, it ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so. So it's like, we all think that home ownership, like we think housing is an investment vehicle, but is that good for the country? Should housing be just somewhere where you live? It is a place of security. If we treat it as such, it's like, okay, everybody needs one house. We don't need 17 houses. Nobody needs 17 houses. So it's my goal is to like kind of change people's minds and say, hey, I want to work hard and save up money so I can buy this place of security, so I can raise my family, I can provide security and a safe place, to raise my kids. And that's what a house is for. The house is not to buy it, hold it, and then sell it off to somebody else at a higher value. That's just not good for the country, because that leads to all kinds of bad incentives that we have talked about in this last hour, where you now have corporations starting shell corporations, all this stuff where you're buying tract homes, and then you're doing build for rent and all this stuff, and creating this subscription model. It's just going to be, it creates a society where we're all in a rat race, and it's just descending to the bottom. And that's not what we want. So it's like to try to attack these issues and say, hey, we're looking at these things in maybe completely the wrong way, and start to change people's minds. I think you have to have, like, I think Freddie, you mentioned this, we have to have a complete narrative shift around a lot of these issues in order for things to get better.
Dude, you just said it so perfectly. Like that is such an interesting way to put it. Like, even the narrative that when we were growing up, that if you don't go to college, you're going to be a loser. And that kind of stuck where like college is the only way to succeed. And I don't think it's as far as that college is a scam, but I also don't like the narrative that everyone thinks if you don't go to college, how are you going to win, is just so untrue. And those are the narratives that need to be shifted, and teaching people, because I think back in the day, I think you had to be financially disciplined to win. In 2025, you have to be financially educated to win. And I think that's two different things. As long as you saved and budgeted, the American dream kind of allowed you to work hard, save, budget, and you would win. Now we have to do a lot more education on trying to help young kids not get into these debt traps, not follow these paths. The world's changing. AI's coming. Please, for the love of God, don't get into debt. So my solution, I'll do more of a takeaway rather than an economic policy, is to spend time with AI, spend time with Google, asking it, typing in your numbers, asking how you can learn about how you don't need to keep buying a new car, how you need to get out of debt as quickly as possible, ways that you can make more money, save, invest, and try to take matters into our own hands so we can have a little bit more comfort while we're trying to fight the system. Because what we all just came up with right here, which I think hit the nail on the head, all these economic policies will instantly fall like dominoes in our favor when we get the corruption out and we get good people in. But in order for us to know who's good, we can't just vote for someone because they say, hey, we're gonna give everyone $1,000 and tax the billionaires. We're like, let's vote for that guy. That's not an economic policy. Like, everyone's fighting over economic policies that are headlines, that, because even myself was so ignorant 5 years ago, I didn't know any of this shit. I had no idea. I was just trying to make money and like live my life. So we just got to keep that education going so that we know what to look for when the right politician comes, and we can encourage the right people to get in there that can actually do the economic policies that will change. But in the meantime, we have to do whatever we can financially to make our lives a little simpler in these hard times. And that's my 2 cents. And focus on who to vote for.
You mentioned control. Like, we are now in a world where we have to take control over what our financial lifestyle is going to look like. Not just be disciplined around not going out as often, or disciplined about not taking the vacation. Now it's straight up, you need to educate yourself, push forward in the job market to a higher level than maybe you need to be at, and maybe get a pinch of luck from mom and dad or spouse to move forward in today's economy, whereas just 10, 20 years ago that wasn't the case. I think that's a great take. Listen, the housing market is seemingly out of reach and not coming back within reach. If you were to get my take on it, it's without collapse, and not just housing market collapse, because housing market has never collapsed itself, guys. I don't know if you know that. Housing market's never collapsed itself. Bank failure and public sentiment crashes markets. And that's where we're teetering on. We could get that headline tomorrow of that quarterly earnings report, that bank failure teetering. Like, that could happen tomorrow, and that could start the unwinding, or could move us closer to the bailout that keeps capitalism moving. But Tiffany, I'm going to round it back to you. You brought up the free market and the socialism. going back to 2008, that really seems to be the mark where it started, where we had a bank bailout that stemmed into 11 big banks' top line accounts from a secret meeting that happened with Henry Paulson around the TARP allocation. And ever since then, we've acquired a taste for money printing, quantitative easing, speculation of assets, especially housing. And I think, James and Fred, you're spot on. We need to change the mindset around speculation around American dirt. That American dirt, I don't know if you guys watched the same infomercials I did growing up, but I'd flip through DirecTV and there'd be this channel where 24/7 there'd be a guy talking about like, come out to my free webinar and I'll teach you how to do this. And then he's going to get you to go to something in Philly. And then it's this $30,000 course on flipping homes. Like, we've been perpetuating and pushing this idea of get rich real quick off real estate for a while, and it's happening. It's working for a lot of people, but we're finding that of the investors that purchase, and I'll finish with this, that it's taking away from the everyday person. Because right now, Zillow says we need 4.58 million homes on the market to reach a point where it is satisfied, supply will push down pricing, and we have enough homes for everybody. Investors over the last 4 years have purchased 5.6 million homes. So if you were to just do the math right there and say, okay, if investors weren't in the picture, would it fix the housing market? Yes. Like, mathematically, yes. The problem is, will we ever get to a point where we stop speculating around real estate?
If we're talking about like how we close out and what we tell people to take away from this podcast about how you can actually make change.
Yes, ma'am.
I'm not going to talk a lot about, like, obviously we need to get corporations out of the housing market. We have to. Like, that has to happen. We need to better incentivize companies to reinvest in their communities and their employees to get wages up. That must happen. Okay. We have to make it more attractive to invest in creating communities in America than it is to ship jobs overseas and strip mine communities in America. That must happen. But the problem is that this may have started in 2008. If the fire or the kindling started in 2008, the atom bomb of fuel took place in 2010 with Citizens United. And I want to be clear that what feels like it started in 2008 was just because we were suffering for a couple of years. What happened is 2010, money poured in to Washington, D.C. And simultaneously, both the corporations and the lobbying groups realized very quickly that they could get away with anything after that in D.C. as long as they kept us from stopping them. I'm going to be very clear. There has been a concentrated effort by Soros, the Koch brothers, by Apple, and by Microsoft, and by Lenore Holmes, and Pulte, and Nestle, and Unilever to keep us fighting one another. And I want to be clear. There's only one thing that will turn this around, because we can't get senators to stop investing. Obvious. We can't get term limits, which we need. We can't get, like, these are obvious things, but we will never get them unless we can recognize, and I say this on every single podcast, that at any given moment, you can look 2 ways on your block. Guy on one side with a BLM flag and a pride flag and a vote blue sticker on their truck, and you look to the other end with a pickup truck and a Confederate flag and a don't tread on me or whatever. Those two neighbors have 93% of their values in common. 93%. You have less than 10% of your values in common with a billionaire. And yet, we have been so easily propagandized, James, we need you, so easily manipulated to believe we should hate one of them more than we hate a billionaire that has bankrupted our community. Mind-blowing to me. And while we're busy fighting one another, both sides of the aisle have been bought, paid for, acquired, and puppeted through Congress. At any given moment, if there is 98% unanimity in the country behind a proposition we want Congress to pass, we have a less than 30% chance they will ever do it. If there is an 80% consensus among billionaires that something should pass, there is a 78% chance they will do it. They don't work for you. And my favorite t-shirt says, make politicians afraid again. Okay? The reason I say that is because right now, politicians, and this comes to my calculus that I talk about all the time, have a very simple calculus they operate under. They are more afraid of losing the $13,600 they need to raise in donations every day than they are of losing your vote, because we vote how we're told. and we don't show up for primaries. Period. If 3% more people showed up for primaries and we all voted against the incumbents, everything would begin to change. All we have to do is make them worry about losing our vote again, and everything would change. But that requires both sides to say it's worth the risk to vote against my incumbent. I don't care if I lose a seat as long as a corporation isn't controlling my politician. And that is what we have to do. We have to get all our friends to come with us to the primaries that no one shows up for except the staunches. We have to get our friends to go with us to the primaries, and we simply vote against the people taking the money. That's it. That's all we have.
And we're fighting against our neighbors while they buy the neighborhood.
In 2008, we all went to election parties. Some of us wore purple, most wore red or blue, right? And we took shots and we were like, oh, my guy won or my guy lost. Better luck next time. We agreed to disagree and we learned from one another and we worried about our communities together. The only thing that really changed in 2008 was that we were suffering at the same time that money was capturing our country.
Yeah.
In the year that followed. And since that time, we have become increasingly divided. We have developed apathy because we have been abandoned by our politicians. We are no longer taking part in the American dream. Young people no longer believe they will ever own dirt, and so they are not bought in. They have no reason to trust this country. None. I don't see anything we have done for a young person in America to make them trust this country. Why would they be patriotic? And in that pursuit, we have lost our national religion that was the patriotism that united us as Americans. And what scares me is usually that is followed by a black flag to try to rejuvenate us, and I don't think it would work this time. I really don't. I don't think any catastrophe could do it, because
I heard a great quote that said the only way that we combat Citizens United is if we united as citizens.
Correct. Best quote. Love that quote. I'm stealing that quote.
Yeah, it's a great quote because it's almost like they rubbed it in our faces by naming it Citizens United or naming it the Patriot Act or whatever they name it. It's like almost like they're kind of a little joke in there, a little hey, wink wink, if you know you know. Well, guys, this has been a fantastic conversation. I speak purely for me. Selfishly, I want to have it again. I don't know what the listeners will say. If you're listening along, you want more of these conversations, comment. We do what you say. I think every single person on this panel is here for their listeners, is here for the people that give them any voice, from the one person that hears a message that could shift and be better from it to, like Tiffany or James, you guys get on your 30 million, Freddie, 30 million, 40 million view videos. Those are great and fun. I personally get a little stressed by them because I'm like, shit, I got more comments to respond to.
Yes.
But overarchingly, the message is the same across all four of our platforms. That's why I love we're not willing to shut up. We're not willing to ignore. And we're not willing to just take face value, the headlines, the propaganda, or whatever we're being fed by corporations as true and as the way it has to be. And I think that's where a lot of people are. They think, okay, it's been this way. It's the way it's got to be. And that's just not the truth. And some people, like a lot of people listening and others are seeing that if we don't get off this path, where are we headed in this maze? And that's where, I stay up at night thinking. But last talking points, last thoughts, James, Fred, Tiff?
No, thank you for bringing us together. I think this is the start. I think I have a vision. I think, Tiffany, we've talked about this vision of like creating an alternative media ecosystem of people who are out here trying to give regular people information that will empower them versus trying to manipulate them. I think there's a big difference there. And I think we're on that path. So just keep coming. I know we're still out there fighting the good fight. So come with us, join us.
And I think the bigger that we can build this and the more people we can get together, that's the kind of group, whether it's us or somebody else, or we work together to find people that we can champion, who can get into office, who can do things. And I also feel too, we keep the political divide out of it.
Yep.
And I think we all do a very good job of that, which I think a lot more people are like us, but it's so red and blue in this country that people, it blows their mind. They're like, how could you even?
It's the 93%, right, Tiffany?
Yes, it is.
Yeah. So it's like, I
93%.
think not dividing each other and labeling it red or blue is also a huge thing that we should do. And I know that people, it's really hard for them to do because they have such strong beliefs, but the truth is in the middle somewhere. And I think, being independent in a way and just calling people out on the both red and blue side when they need to be held accountable.
Red and blue are both in the flag, last I checked.
Dude, yes, absolutely. So yeah, I just appreciate all of you and the work that you do, and I'm really happy that I was invited to chit chat with all of you, because I learned a lot today, and that's all I can do is keep learning and keep sharing what I'm learning, and I think we'll eventually make the ripple effect, and we'll make a change, because I don't want to go down without a fight.
Hell yeah.
I guess I'll finish by
Peacefully,
reminding.
that is.
I'll finish by reminding everybody that today, if you have a 401k, if you're lucky enough to be in a position to have one of those, and you've worked hard and you want to keep it safe, you need to contact your fund manager and make it clear. There's no fund manager that manages your 401k that is qualified to know what 401k is going to do what a 401k invested in private equity is going to do over the next 10 years. There is no business model. There's no case study for them. This will be entirely speculative. And I'm begging you guys to protect your assets and create a paper trail immediately and make it clear that you have no interest in allowing your money to be dumped into a strip mining operation for your communities. To improve your communities, I encourage you to talk to people that you might think differently than you about the things you have in common, because it's so much more than you believe. It's so much more than you think. And that it's literally this tiny 3% on the left and right, almost entirely culture war talking points, okay, that you allow to make you believe that you should hate your neighbors. Because the moment we stop hating our neighbors is the moment that we work together to defend our communities. And I beg you guys to have real conversations. Don't throw Molotov cocktails, throw a cocktail party. Okay? Bring people over, hang out, do things together, and learn. Everybody's intentions behind their party are driven by a belief they're doing what's best for their family, their community, or their children, right? Nobody wants to hurt you by voting. Nobody wants that. And so please talk to your neighbors, talk to your community members, and start choosing better and showing up to your elections. Please do that. And remember that your voice matters, your vote matters, but it matters before the main election. That's where it matters. These incumbents have given you 30 years of the same economic and foreign policy, taking your money and giving it to billionaires, taking your money and giving it to other countries, no matter who's in office. 30 years of the same people being there and never getting voted out. Show up to your damn primaries and vote against your own incumbents. Choose somebody else and bring friends. Bring all your friends. And over the next year, I'm going to be beating that drum up, down, left, right on every podcast they'll let me on.
So instead of election parties at the end result, we should be having primary parties where we go pregame the primaries and then go vote.
Parties. I mean
pregame the primaries.
And
I love it.
Make friends. I go on podcasts on both sides of the aisle. I'm friends with every single person I meet, whether I vehemently disagree with them on an issue. I can't learn their perspective if I don't. And I encourage you guys to go support small businesses in your community. They are literally the only reason your community still exists, as these private equity firms are strip mining them. So go find a small business and support them. Give up your convenience. Give up the $1 savings. I know it's not easy. In small business, we trust.
In small business, we trust, the creator of 99.9% of jobs in the last 30 years. And I want to end with a word or prayer, like always, to say that you mentioned neighbors. There's a very large book that we based our country around. It says the number one command from the guy that this is written about. He's asked the number one command. It says to love thy neighbor. Yes. So when our country is being bred to hate thy neighbor, I would wonder if the Christian values are really standing the test of time. But regardless, this has been a fantastic conversation. We'll all individually probably continue to chat. Now we have a group chat, so now we might just leverage the group chat every now and then. But regardless, hope to get you guys in front for another podcast soon. Everybody, if you want to follow James, at James Lee, 5149 at the beginning of that. Tiffany Cianci on X, TikTok, and I think you go by a different name on Instagram.
Yeah, and Instagram and X, I'm the Vino Mom, because I was a sommelier for years.
Okay. So when I was talking about wine and Taco Bell, you were like, ew, why would you put Taco Bell
I was a very, very well-educated sommelier that traveled all over the world for years. So I'm the Vino Mom on X and Instagram, and I'm at Tiffany Cianci everywhere else.
and X as well. And then Freddy Smith, all platforms, just Freddy Smith. You'll see the background. It's pretty much the same. I don't see the couch as much, but all right, guys. Appreciate you all. We're going to hit end on the recording. We'll see you on the next show.